Eric, let's start with the exchange itself. A 2-year high on the NS20 index, up 1.5% to 4413.
Yeah, we've had a really good run. And, even at the beginning of this year, we were a little bit concerned, but, it looks like liquidity is really helping spur this market higher. We're starting to get a bit concerned about the valuations of some of the counters, especially some of the large caps. But somehow liquidity is really spurring the market.
Let's look at some of the companies there that have been quoted as leading that rise, and 4 of them in particular. We're looking at KCB Group, the KenGen energy company, the British American Tobacco, East African Breweries. So we've got tobacco, we've got breweries, we've got beer, we've got power. And all of these reflecting perhaps economic growth. So how does that tie in with your overvaluation aspect? If the economy is going to grow, why should these shares be overvalued?
We think the fundamentals of the economy remain quite good. And in fact, even from an economic growth perspective, inflation numbers are going to remain relatively good for the rest of this year. But if you look at the prices that, the multiples that we are trading at, for example, if you look at East African Breweries, we're now trading upwards of 25 times PE. And if you look at last year's earnings, we had one-off earnings, profits from the disposal of some of their Tanzania unit. Then you also had a slowdown in volumes towards the end of last year. So that really concerns us, given that also cost has been going up with regards to the 2012, 2013 numbers. So we think, we might, once we see the profits coming out, that might cause a bit of pullback. BAT is up over 100% over the last 12 months, and it's just from a pricing perspective, but we think the company is fundamentally okay. So it's not really about the fundamentals of the economy, but it's more of just the pricing, whether those prices are sustainable.
Also, Eric, the way these prices have gone up 7.5% for Sasini, the tea and coffee producer. Now that is vulnerable to the agricultural sector if there are good rains, and then optimism, obviously, a cyclical sector. But that's a big rise. And if you've got KenGen, for example, up nearly 7%, it's a temptation to take profits, isn't it?
Yes, certainly. And we think if we have any kind of shock over the next few months, and we have the elections coming up, we think if there's a shock, or maybe liquidity reduces, there is that likelihood that we'll probably see a pullback. KenGen has had a good run. Obviously, it had pulled back quite a lot before seeing this run that we're looking at. The agricultural sector will remain positive on it because of the valuations remain relatively attractive. Even though we expect earnings to remain under pressure, the currency, over the last year has been slightly stronger than the previous year. So that suggests that there could be a bit of weakness in the agricultural sector. The banks generally will remain quite positive on them, as well as the insurance sector.
Then that news item we had earlier, the collection of tax revenues up 13%, and I suppose that raises the capacity of government in the economy, government spending. On the other hand, another news item this week was on a very high deficit. So in terms of that growth picture, the role of government there and the role of government in relation to some of those big companies.
Yeah, even though we are seeing tax collections going up, they are actually falling below target. So government spending is actually a lot higher. And when you combine that with the current account deficit, we are only being supported by the capital account. We are seeing a lot of additional investments coming into the economy. Obviously, the resources sector is supporting that, services, we're seeing a lot of capital investments into the economy. But the current account deficit and as well as the fiscal deficit are things which really concern us.
And then just looking at another one of the companies there, we were talking agriculture, Rio Vipingo. Shareholders been told that they mustn't expect too much in the way of dividends. There are still dividends, but don't expect more.
Yes, they've just announced their full year earnings. Earnings are down 18%. They kept their dividend unchanged for the year. And fundamentally, they did relatively okay. But obviously, a decline in profits is never good for the market. And I guess that was sort of the guidance that they were giving to the market.
And then Tullow Oil, the listed company in Kenya, is trans-century. It says it's had a boost from an announcement by Tullow that they're increasing prospecting activity, exploration, and of course we've said before, this could be the joker in the pack in a good way for Kenya. Oil on the horizon, exploration, perhaps to change the nature of the economy.
Yes, Trans-Century is a listed entity which focuses on infrastructure, and one of their companies around the area in northwestern Kenya where Tullow operates is Civicon. And we've been thinking Civicon is well positioned in that region to do some of the work that Tullow would be outsourcing. And we've seen this year Tullow has said that they're going to drill 8 more wells in Kenya. So we think as part of that exploration activity, it's going to create more business for companies like Civicon, which are operating in the region. Already they are already in Tullow's books because they've been operating in Uganda as well. So we think that should eventually flow into Trans-Century's earnings.